Hello everybody, welcome back to T.U.B Investing YouTube channel. In my last video, I stopped at the point where I talked about how good a company makes telematics worse, but I didn't explain why did I sell it off. So in this video, this is what I will be doing, right? Why did I sell off such a good company with over 900,000 of subscribers and with significant growth for, in fact, not only this quarter, the last few quarters, and their annual recurring revenue at 128.5 million. Before I continue, please note that I'm not a financial advisor, but I still like you to like this video and subscribe to my channel. Thank you very much. So without further ado, let me talk about the 6 reasons of why did I sell off this company and probably not buy it back. First reason is dual listed in Africa. This may not be a big reason, but having dual listed, right, you are affected by a lot of other things, right? It could be a double-edged sword, meaning anything in Africa, economic wise, or the listing directly wise, right, will affect this listing. I mean, people selling in Africa, right, may have a direct impact on the listing in US, although there may not be any fundamental issue in the company itself. So I'm a bit skeptical when it's a bit dual listed. It's not a big reason, but it's something that I'm a bit uncomfortable with. And obviously they have a concentration in Africa, that's why they are dual listed in Africa, right? They have more than 50% of their revenue recognized in Africa. And if you go back to my video one, you know that most of their customers are in oil and gas in Africa. And then thirdly, the third issue is all these short-term issues, right? And so in this, firstly, recently they acquired Trebor's field service management company side of the business, and added another 38,000 subscribers and 10.6 million of annual recurring revenue to the group, right? But they say here we do not expect to retain every customer, and our internal plan is around 75% success rate over the next 12 to 18 months. So when they're integrating, they expect some of the customer to leave, right? That means in the future there could be some reduction in their subscribers. And what happens if this is worse off, right? So hopefully there's no headwind in this explanation, and it's really 75% success rate, right? So moving on, the next point is, I know that they state that they do not have free cash flow right now, and over the 5 quarters is because of macroeconomic headwinds, right? And then they don't want to lose their market share, so they still have to continue to buy this hardware at a higher price. And they only say that they will have significant free cash flow in 2024. So if what happens in 2023 goes into recession, right, and then this company starts selling down, people will start selling down mixed telematics at the end of the day. And that made me feel a bit how confident am I in this company, right? So it's dual listed, it's a lot of things in Africa. What happens if Africa economy go down the drain? A lot of customer in oil and gas, as I explained in the first video. What happens if oil and gas suddenly go down, right? And if you read their transcript, right, their next strategy seems to be expansion in North America, because they are getting these OEM connect companies, right? Most of them are in America, and although they are over globally, right, the expansion seems to be in North America, which if you can see here, right, it's so competitive. Like I have a question on this strategy itself, actually, but regardless, I'm not the CEO and I'm not on the board of directors. And like I said, they have a lot of customer in oil and gas. What happens if oil and gas go down, right? The oil price go down, then their customer may just stop expanding their fleet, right? If you remember, ESG was something previously, and oil and gas companies just stop expanding, right? And I explained at the start of this video that their subscriber has been adding for the last few quarters, right? That could be a reason. The reason could be just the oil and gas boom at the end of the day, other than opening up. And you can see in their 10K, right, they do talk about a representative list of their largest customer, and mainly there's a lot of oil and gas services involved, and also some of the mining companies, right? So it's very commodity based, and if their customers are very commodity based, that means it will be affected by commodity prices and stuff like that, right? And we know we have been in this boom and bust cycle over the last 2 to 3 years, right? So I'm very skeptical in this point of view, right? And then finally, this is the most important factor, which the competition in Africa. So there's another US company called Karu Limited, listed in US as well, and it has a subsidiary called Cartrack, which is actually listed in Africa as well, but it's sort of like 100% owned by Karu. I mean, I haven't gotten things straight. I haven't researched everything on Karu, but I sort of know, like, it owns Cartrack, which is also listed in Africa. So it's also sort of like dual listed, but actually Karu is headquartered in Singapore right now, and their strategy is to expand in Southeast Asia. And if you let's look back to this, right? Southeast Asia here, it seems like there's totally no one is looking at it, right? And Karu is going in. So that's a very interesting perspective to me, right? And if you look at their free cash flow, right, although they do have high capex at the end of the day, but they do still continue to generate free cash flow. So it's definitely a bigger company than Mixed Telematics, and it's doing well. At the end of the day, it's doing well. And then to Mixed Telematics, if you're so big in Africa and there's such a big competition in Africa, what is your mode, right? Or how do you ensure that eventually your customer doesn't shift? Maybe, I mean, your customer, if you have the hardware, it probably doesn't shift, but it's a very competitive space at the end of the day, and how much can you grow, right? And like I say, I look at their strategy and I'm a bit skeptical because they are expanding into another area which is also very competitive. So having said that, that's my reason for why I sold Mixed Telematics. So this video is short and sweet. I have 6 reasons, and because it's dual listed, it's not such a big reason. But concentration of revenue in Africa is something that I'm of course concerned of. And understanding how they are diversifying in their strategy to US is also something I'm very concerned of. And customer very commodity based, I'm concerned. And obviously competition in Africa, they could eventually lose out as well. So all these 6 reasons made me feel that I should sell off Mixed Telematics, despite it being seems like such a good company, right? So that's the end of this video. Thanks for watching, and I've talked about, this is the 5th company I've talked about since the restart of my YouTube channel, and obviously there's a lot of nitty-gritty in betweens about how the recession coming, what I'm looking after, and stuff like that. So hopefully I go back to talking about companies in the next video. If not, please subscribe to my channel and ring the notification bell. Please also share the video. Thank you very much, and I'll see you in the next video. Bye.